My question about the situation when we have confidence, but I have confidence, but when I open a trade, I just want to see the candles going straight to the TP. So is there a mental issue, something, a situation, something to figure out how to solve this problem? I'm good. Sometimes because of this, I traded. My trade is going to against me. Sometimes I close it early. This is my question, and this is my mind. Thank you for everything.
Well, I'll take a stab at it. It sounds as
Thank
if
you.
your uncertainty may stem from a lack of experience reading the tape, watching the market with your model in focus. Two, if it's not that, and maybe a combination of over leveraging. I've seen a plethora of individuals come to me with that same question on a day by day basis. And it's usually linked to them wanting to trade larger size than they're better equipped to do at the time with their present skill set, let's say it that way. And if they haven't been utilizing the model that they're, if you come before someone, okay, if you had a winning trade and you came out and said, okay, this is the last trade I took and it was a winner, and you'll be confident in explaining what your model was. And I've listened to this space and I've had people email me and I've watched other students and other traders doing other things. And they're very confident about what they did when it was a profitable trade or when it worked in their favor. And you're going to have to grow to trusting that it's not going to always do that for you. You're going to have a willingness to accept the fact that you as the operator, you as the, well, executor, it isn't going to always pan out for you. And with the increased volatility and all the things that's going on around the world, all it takes is a knee-jerk reaction to something going on geopolitically, and then boom, we have 100 handles instantly. And it's not unheard of to see several hundred handles in 1 minute for NQ. You know, that's volatility that can tear your face off. And you have to have a great deal of respect for that, but it shouldn't also paralyze you. And by having an expectation, what is rooted in a baseline experience, meaning what are you trying to trade? What's the catalyst? What are you trying to enter on? Why should the market go to where you think it's going to go? So where's terminus? Where's the draw on liquidity? Where's that target you think it's gravitating towards? And why should it do that in the first place? And if you're not confident that these things that you're leaning on to ascertain that information, if it's not uniform and consistent each time you do it, then it's normal for you to feel uncertainty. It would be not normal, okay, for anyone else to feel that way. So if you don't have the model well framed, written, and then you review it on a day-by-day basis, not tweaking it, not trying to add new things and parameters and settings and whatnot. Simple things. Why are you going to get in the market going up? Pax made it perfect. I say the same thing. You only have 3 functions as a trader: do nothing, buy, or short. It's as simple as that. Now, if you know what you're looking for, if there's so many things that's indicating to you as someone that's been studying price action, everything seems like it wants to go up. There's so richly illustrated in price action that it wants to run old highs. It wants to go to these old highs. Well, chances are you probably are going to look for a long in that. So then you have to know what it is you're going to use as a catalyst to get into the trade. So what's your function for entry? And as I teach us, there's several PD arrays depending upon where you're at in that price leg. Once it starts, then you're going to have to, resign yourself to what is at the market right now. And you're going to just forego the opportunities that were afforded to people that were more astute at the time, the deeper discount entries on a long position. But that doesn't mean just throw it away because you couldn't get that low entry. But expecting the price to run away, this is what I get. If not more than anything, then tell me what the bias is, Michael. Tell me how to know when it's going to go up or down. The second highest requested information, and I've said it many times in lectures, I've said it many times here with Kit's audience and the things I've done in my own Twitter spaces and whatnot, is how can I learn to trust the move that I'm in? Because I want the run to get right to my target and be done with it. And I'm telling you, there's no shortcuts to this. It has to be endured. It has to be done over time, over weeks, months, and years. And traders, I can tell you still to this day, there's some trades that I'm getting in there. I know I've put on more size than I probably should have. Once I get in the trade, then it becomes real clear. I probably put a little bit too much size on this one. And I want it to run. I feel that same impulse that any one of you, that if you're brand new to trading, you want it to just quickly get to your target because that uncertainty. So what I do is I practice what I preach. If I feel like I'm emotionally attached to that trade, I got to scale out of it. And the first thing I do is cut half of it off. Now, some of you might think, well, that's too much of a haircut. I'm not going to take that much off the trade. Because what happens if it runs and I could have got that big run? See, I've been doing it long enough to know that I don't need that next big win. I don't need the next trade to be a big windfall victory. I don't need that. I just want it to follow the model. And I need to make sure that I'm executing under the premises that I've outlined for that model and stay stringent to it, adhering to just that only. So over time, watching your price action with that model, that means no executions in the beginning. This is how you condition yourself. You have to trust what you're doing is a viable model. Just looking at it in static price action in the past, that's noteworthy and that's good for back testing purpose, but that's what a neophyte starts with, and they don't stay there very long. They have to graduate to then watching price action live. That's tape reading. But you can't press the button yet. You can't do that because what you're going to do is you're going to train yourself to be impulsive, too reactionary. So what'll happen is, and this is how it happened for me, and a lot of my students will confess if they're being honest, they'll tell you the same thing. And anybody else using some other method would probably tell you too if they're being honest. You know what your model is, you know what you're trying to trade on, but then you can't stand the impatience of not waiting for the actual setup. You sit there and you anticipate the setup. You anticipate the entry, and you get in before you should. What do you think that's going to do for your subconscious? You're inflating the necessity for that outcome to be favorable for you, much more than it would be if you simply would have used the model entry. What was the mechanism that gets you in? Buying a fair value gap, buying a breaker, some kind of support idea. Whatever that function is that you use to get into the trade, now the importance of being right or wrong is such an inflation that your mind now is consumed with it. And the only mechanism that our brain can do to compensate for that is we start perceiving time through the lens that it needs to speed up for us, or we're uncomfortable. Time can't be sped up. It can't be sped up. But when you're in a dramatic situation, for instance, you ever been in a car accident? I've been in several. I sped a lot as a young man, had fast cars, and did stupid stuff. And I can tell you, as fast as my cars would go, they seemed like they were moving in slow motion every single time I was in those accidents. Why? Because your brain is calculating all these things. This is about to hurt. I am about to have some serious shit happen to me. And it's calculating all this constantly, real quick. Our brains are amazing creations. Fastest computers in the world. They'll never make a computer faster than our brain. But you now place yourself in that same situation. You just made an accident happen. You caused this accident. You over leveraged, you anticipated, and then you jumped ahead of the actual setup and you entered before you should have. Over leveraged, and now you have two things going against you. You need this to end quickly. You want it to end quickly, but now because you're in an emergency, how's your brain going to react? It slows everything down. And that's very, very uncomfortable for people that are not used to that. There's a lot of wonderful things you can do as additional studies and case studies for how the brain works, how it perceives stress and anxiety. All these things are actually beneficial for someone like we as traders because we use our brain. We use our brain to determine whether there's a viable risk to be assumed. Is it worth to take that risk? But we as traders, when we first start, the impulsive nature in what we do through our flesh is we want to have that instant gratification. We want to go out and show the world that look what I did. Look what I just made. And you won't tell them this is how much it hurt. This is how scared I was. My balls were drawn up to my ass. Okay, I was scared shitless that this thing was going to turn on me in a minute and I couldn't get out of it fast enough. You won't tell them that because you need to convince yourself that what you did was the right thing because you know deep down inside it wasn't the right thing. You jumped the gun, you were impulsive, and you over leveraged. So right away, you're doing every cardinal rule that a trader should not do. You just did it. And now you're arguing with, I better get out of the trade, or what do I do? Do I stay in the trade? If it wins, wow, it's going to be a big payoff. But if I lose, I already know I did the wrong thing. This is going to suck. So you're caught in this loop while your brain is completely compressing time. It's still the same time everybody around you, but for you, it's dragging. Every 1 minute candle feels like 60 minutes, and they're just stretching out real slow, real painful. So to alleviate any need for going through that, you have to do things properly. That means back test until you understand the model. Once you understand the model, then you have to place yourself in front of price action. But you can't place yourself in front of price action while risking money when you don't know what the hell you're doing. The only thing you're doing when you do that is you're feeding bad habits of concern about the outcome being favorable versus, is price continuously giving me feedback? Is every single one of these candles printing supporting price? Every down close candle supporting price action to the upside? Yes. Okay, that's all I'm focused on. I don't give a shit whether my stock gets hit, or if I get my first partial exit, or if it goes to target. I'm watching every single candlestick as it's printing. I'm getting immediate feedback. I want to know, is everything that I'm expecting to see in price action, is this price swing still holding true to what my initial expectations were on it? And if you are focused on that, you're not over leveraged, you waited for your signal, you waited for that setup to be there. And when it was there, your order was executed, because true professionalism is going to be in the form of a limit order, because you know what you're looking for. You're getting your price. Marketing in, sure, you can do it. But I want you to go in with your limit orders, because that way you're getting the price that you want. You're letting the price in the market come to you. That means you're exercising more discipline, patience. You're not chasing price action. We're not buying it when it's going up. We want it to come down into that fair value gap. When it hits it, then we have immediate feedback. Does it stay in the upper half of it? That's what we want to see. If it stays in the upper half of it, what does that do? It gives you confidence. You can't worry about your stop loss getting hit or the elation of you getting to your target if you're focused on every single candlestick and what that criteria is matching for the model. If you haven't spent the time watching price action, building up to that level of experience, seeing it without monetary risk, without the reward, without the punishment of being wrong, that's the missing piece that everybody skips over. They all just want to get out there and start making money. I want to be the next guy that makes $1 million. I want to be able to go and say, this is what I just got to pay out. I just hashed out this much millions, and it only took me this much time. I'm not trying to reduce what these people are doing, because it's commendable. It's wonderful. I know what it feels like to make that first $1 million, but wait till they have what it feels like when you lose $1 million. You want to puke your guts up. You don't want to get out of bed. You don't want to face your wife and kids. You don't want to do that because you caused it. So to avoid those types of things prematurely, you have to do the right things. That means there's a step in a place for everything. And wanting to see the candles run to your target, everybody wants that, man. Everybody wants that. But not over leveraging, not rushing the setup, not predicting or anticipating the setup before it's there, just because you can't stand the impatience of waiting for it to come up. That's indicating, here's what it's showing you. You haven't done enough work watching real price action and trusting that the model that you're looking for delivers. You just know that there's something to it. So the lottery's $950 million. Everybody's probably buying a ticket. And if I don't buy one, shit, I can't win it. So let me just get there and just blow $50 on it. It's impulsive. And you can't be impulsive about your trading, because if you remove all the things I've talked about here, it won't fix everything, because you're still going to bring baggage to it, your own, quirky things, their personality problems. We all have them, character flaws. But it'll do the most in terms of staving off these things and help it a little bit more streamlined, get to your outcome that you want.